Hi, and welcome to Financial Minds Meet the Experts. I'm your host, Jaime Agostino. As you know, on this podcast, we're joined by financial industry experts to talk about topics, trends, and themes that credit union professionals need to know about. Today, I'm sitting down with John Cuneo, our SVP Chief Risk Officer of Vizo Financial. And you guessed it, we are talking risk and security. So John, thank you so much for joining me today. Would you mind sharing just a little bit about yourself and your role at the corporate?
Sure, Jamie. It's been an interesting couple months, right? So like the last time we talked, I was the Vice President Information Security. And since then I have been promoted to SVP Chief Risk Officer. So I get to oversee all of risk. So my perspective for the last 15 years have been cyber related, information security related, some compliance, some regs, but mostly, focusing on the technology side of things and maybe some of the physical security of things. So now I get to look at a bigger picture of risk. And it's been an interesting journey in the last month and a half, although it's been fun. But yeah, that's where I am now.
All right. Well, congratulations on the promotion. We'll go ahead and get into some of the questions that I have here for you, John. So
I'll do my best.
what are the most pressing risks currently facing credit unions, and how have these evolved over the past few years?
Well, yeah, it's a great question. I was just, as I was contemplating this podcast and trying to prepare myself for it, I started asking some questions around with like our enterprise risk manager director, our business continuity administrator, obviously the InfoSec team. And I also reached out to, our VP of compliance and fraud. And so a couple of common items came out of that. First and foremost is maybe the technical skills on the technology side of things. Okay. There's a growing gap maybe between, especially in our credit unions that never have an in-person IT and they do a lot of outsourcing, but yet they want to be cutting edge, right? So they want to be cutting edge on services offered, and to have that, sometimes you have to, if you're already outsourcing, you have to continue to outsource, and you have to make sure you align with your vendor. The vendor aligns with your security appetite, your risk appetite, and they have security best practices in place. But if you have an IT staff, they can help with that and try to close those gaps, right? So that's kind of like we're starting to see that shift a little bit, especially with also other things that are targeting credit unions like ransomware and a lot of phishing attacks and a lot of cyber attacks, right? The other one is climate risk. Climate risk has been really big, and in just last week, we saw the big fire out in New Jersey. Mm-hmm. We actually have a fire here locally in Pennsylvania that could affect many businesses, not just credit unions, but they will affect credit unions as well if they spread fast enough and quick enough, right? So you have to be aware of all these climate risks, the changes that are happening there. We're well aware of, especially if you're in the South and in the Florida area, the hurricanes and all that, but there's other things happening, right? Hurricanes came up and hit and really devastated North Carolina last year, right? So that affected credit unions, a lot of credit unions, North Carolina, Tennessee, and Kentucky. So you have to be aware of those risks, and they've evolved, obviously, over the last few years. It just seems like they've been become more intensified, right? Supply chain risk, right now with tariffs, like, I don't want to get into the political side of things, but with tariffs, you have to worry, are you going to get especially for like companies and sectors that rely on chips, like computer chips and stuff, are you going to be able to get the chips you need? Are you going to be able to get the parts? Like the auto industry right now is in panic because more from the consumer side is like, do we need to go get a car now? Before the tariffs start hitting and affecting those prices. And I know there's been some exceptions put in place and all that, but there's still a lot of uncertainty around the supply chain. Yeah. And then talking with our ERM director, Belinda, she was talking to some people at our recent risk conference. We just finished that up last week. It went very well attended, or 2 weeks ago, actually, 2 weeks ago, it was well attended. But she was talking to some of our credit unions, our members there, and they specifically talked about marketing risk. Like, and you're well aware of marketing risk. Like, what are you going to market? Is it suitable to our members? Is it right for our members? Is it priced right? Is it well received? What do you do if it isn't received? So there's some type of risk there around that. So those four things were the most common things that came back to me. I agree with all of them. from my role now, looking at the fire last week in New Jersey, I'm thinking that's the first time I really thought of what are our credit unions going to do if they have to move suddenly, or how are they going to service their members that may be affected by those fires? Whereas from my other perspective, I'm thinking, are they going to be able to stay online? Are they going to be able to secure any transaction that comes in that looks like it might be fraud coming in, trying to take advantage of those wildfires? And now I think about it from another perspective. So
Yeah.
that client.
Yeah, there's a lot when you're looking at it from more of a holistic view. You see so much more, and there are a lot of risks that are facing credit unions today, and they continue to grow.
They
So,
do. They do. Yeah.
uh, with this increased digital transformation, you kind of, we're talking about, credit unions wanting to advance some technologies, be current. How should credit unions approach cybersecurity risk then? In this digital world, and what are some of the biggest threats in this space?
So one of the most common threats we're seeing out there is ransomware. Obviously, that is still very high percentage of our attacks. Almost all of them start with a social engineering type of attack. So most typically, it's probably some type of phishing email or maybe a website that they went to that has a bad link. But it usually starts with some type of social engineering attack. So educating your staff mostly first, and sometimes your members will be a key part of really handling the cybersecurity risk, right? And then being aware, doing a risk assessment on new products. So like if you're bringing a new online service in, you need to make sure it's built from, with security first. But you also want to make sure it's convenient for the member, because if it's not convenient for the member, they're not going to use it. If they don't use it, you're going to, you possibly can lose that member that is really interested in that service. So you have to be aware of all that. So a risk assessment really comes in place there, understanding the gaps, the security gaps there, trying to make sure you are not only securing it, but you're also keeping their data private and secure, right? So those are the biggest things, but you have to be aware of that. I come back to the human element of all this. The human element is very key to a lot of cyber risk. If we can try to close the knowledge gap that's involved there, we can actually handle a lot of the issues there, right? So we can cut them off and mitigate them ahead of time.
Yeah, yeah. I mean, it's one of those things, we're taught as humans to be, kind and trusting. And, that's kind of like, in the credit union space, that's also kind of what we're taught. So it's hard to then be like, well, you can't trust everything, and this is why, and these are the security implications. So, I mean,
Right.
it's definitely a mind shift for a lot of people.
Right. People helping people
Yeah.
it's a great model, and it's actually a great concept, and it's excellent in practice. But at times, especially in cybersecurity, it's very difficult. You have to have some type of paranoia and verification before you click or
Yep.
interact with.
I've had many years working with you, and so you have given me the right level of paranoia to question a lot of things these days. So
Yes.
thank you for that. So let's kind of look at regulation. I mean, that's a big part of the credit union. So how have recent regulatory changes affected the risk management practices at credit unions?
Really, I haven't seen much of a change. When it comes down to from at least from a cybersecurity perspective, there hasn't been much of a change, right? You still have to follow 748. You still have to do a risk assessment. Same thing from other, talking through with our VP of compliance. We haven't seen much change there yet, but there's so much uncertainty around there, because like what reg is going to be applied here? What reg could be written off tomorrow and say we're not going to apply that anymore? We're seeing uncertainty at the examiner level with the OCC talking about having just one set of regulatory exam type of standards. Sorry, standards. I had to think through the word there. Standards apply to all credit unions, and not large credit unions have this standards, or not large financial institutions have this standard, small ones have this one, but that everybody is judged by the same standard. So that could be applied at the NCUA level too, right? Because we have the ONES program plus, and then all the other regions, right? So they could just come to one standard. That's a possibility. There's a lot of uncertainty around the NCUA after what we saw a couple of weeks ago with, some of the board members no longer on on the board, and we're down to one board member. So I know they're trying to stabilize the thought process there, but there's a lot of uncertainty around regs and exams and all that right now. And like I said, I don't want to get into the political side of things, but yeah, there's a lot of uncertainty there, which adds risk, right? Because so my best recommendation is continue doing what you have been doing all these years to comply with the current regs, and then we can adjust as the changes come about. So.
Okay. All right. Can you share some of the key strategies that credit unions should employ to mitigate risks?
Sure. I'm going back to my favorite topic or my favorite answer, right? Well, I'm going to change it slightly. We're going to change it slightly. You have to establish a risk appetite. What risk are you willing to accept? What level of risk? And it has to be across the board. It has to be at the financial level. So we have credit risk, we have liquidity risk, we have, interest risk. We have all these other risks out there from a financial perspective. You have to have a risk appetite, but you also have to have one on regulatory side. Also, it has to, or at least be coordinated with the regulatory side. And you also have to one on the cyber side, right? So you have to have this level of risk that you're willing to accept. And if you cross that level, how do you try to lower it back down to the level you want it, right? So risk appetite establishes the baseline level of risk you want to accept. And from there, you do risk assessments. So I know hammering a dead horse, risk assessments, they can be your friend, because going back to our previous question, having good documentation is key. Well, same thing with a risk assessment. If you can document your risk assessment, if something, some examiner comes in and starts questioning, why are you doing this? You can show, hey, this is what we've identified. This is how we mitigate it. Mm-hmm. And sometimes you may say, this is how we accepted it, but this is how so risk assessments, documenting those, identify gaps that basically goes above your risk threshold, and then being able to mitigate, put some type of mitigations in place. And that can be a whole different level of control, different, like if it's a financial thing, maybe putting some limits on it, but you want to be able to put some mitigations in place, maybe time controls, like can only use this service between 8 a.m. and 5 p.m. We don't allow any transactions after 10 p.m., between 10 p.m. and 6 a.m. or whatever. Whatever you try to do is to try to mitigate. You can put fraud monitoring in place, but those are the type of mitigations you want to place. But you start out with a risk appetite. You go to a risk assessment, identify the gaps, and then you put in some mitigations to control those gaps.
Okay. So basically, credit unions really need to make these risk assessments their friend. They need to embrace them. Okay.
Yeah.
All right.
Yeah. Yeah. Starting out, man, risk assessments were, they were boring, a lot of research. But then when you start realizing the benefits they provide you and the documentation you can provide to your examiners, your auditors, they become your best friend. Yeah.
Okay. Well, you kind of mentioned it earlier. I mean, with the rise of fintech, the digital banking services that consumers want and need, how are credit unions managing the risks then associated with adopting those new technologies while also trying to ensure financial security?
Let me put my cyber hat on here. Be slow to adopt. Don't just jump on it, right? So watch it for a few weeks, for a few months, identify the actual needs that it may satisfy to our membership, right? So make sure it's going to accomplish something. Don't just adopt it just for the sake of adopting it. Make sure you have a business plan that it's going to be tied to, right? So, or even a service that it has been requested that it's going to be tied to. And then going back to risk assessment, assess it. But this one, you're going to add a vendor. You may possibly, because more than likely you're going to be partnering with a vendor, but you're going to want to assess that vendor, and you want to make sure that they're financially stable. They have a good supply chain. They have a good business continuity plan before we even start moving forward. And then you assess the actual service you're bringing on. So fintech, the cool thing about fintech is they're cutting edge, right? But the slight risk that we have to be aware of is because they're cutting edge, most of the time they're also probably a newer company, right? So we have to be aware of the financial risk that may be there if things go wrong, right? So we are seeing a lot of bankruptcies happening that is affecting some supply chains across different sectors, not say the financial sector per se, but other sectors. Bankruptcies are affecting some supply chain to the services that other companies are offering because they're moving or expanding too quickly, right? So you want to be able to do that. You want to do a vendor assessment. You want to do a risk assessment on the service itself. Obviously, identify the gaps that goes above your risk appetite, your threshold of risk, and see if you can lock them down in some way, or that way it can be more acceptable to you, and then you can actually offer that service to your members.
All right. Well, you know, for me, with consumers a lot, education is key. So how do or what should credit unions do to educate their members about the potential risks they face, and how can their members be proactive in protecting themselves?
Yeah, so this is always the hard question, because it's easy to say provide education, provide pamphlets, provide information on your website. You can't always force the ingestion of that information. The thing I can say is just keep doing that. Keep doing what we have always done, which is educate, educate, educate. Um, Proactively, you just have to try to be able to educate them when they come in person. Force their password, maybe a password reset, force MFA on them, and that is so. I know, that makes things a little bit more inconvenient is to force MFA. But if you have that MFA, there's that extra layer, right?
Right.
So that extra layer of protection when they're logging into your site, which is key to me. Because like if you make it a little harder for the bad guys, then they may move on to something that's a little bit easier for them. Because they only have one purpose. They only have one purpose is to try to make money through causing some type of attack to be successful. And they only have to be right once right? So hopefully they get the right person or the right member, but if they're right once, they could, have a windfall and they can, stop for a few weeks at least. But education, I think from a credit union's perspective, they can be proactive with fraud monitoring and getting to know their member. So understand your member, what their habits are, and make sure you are monitoring their transactions, make sure there's nothing out of the norm. If all of a sudden, I'm ordering something purchasing something here from locally from Pennsylvania, and all of a sudden now I'm purchasing something from Hawaii within 12 hours. It takes me a lot longer to get from Pennsylvania to Hawaii in 12 hours, counting flights and all that. You may know that there's something up, and we have to have a system in place
Yeah.
to be able to monitor that. So, and that goes with a lot of different things. So from logging in, like if I'm logging in from Pennsylvania consistently for 3 months, and then all of a sudden now I'm logging in from Brazil or Europe, there may be an issue here. So we have to be able to monitor that as well. So, and then just keep educating them as much as possible. But if you see something in fraud monitoring, reach out to the member,
Yeah.
let them know. So.
Yeah. Yeah. And I think they would thank you for that. I mean, in theory, they should, hey, we saw something that looks a little suspicious,
Yes,
just calling to confirm, like you would think they'd be appreciative of that, that
they
you're looking
would.
out for them. You kind of talked about, the member experience just for a moment. And, obviously, my marketing side and, of course, I kind of lean towards the member experience. So how do credit unions balance that long-term strategic goals and the member experience with this ever changing, risk landscape? What role does risk management play in the credit union's overall strategy?
Yeah, so that's key. We have to learn how to balance that, right? So I go back to the story of when iPads came on, they weren't very well secured, but you have to embrace that technology because that was the future. So how do you embrace that technology but be a part of the effort leading that technology for your membership, with the whole idea of we're going to keep this secure and we're going to keep their data private. That is the key. And it is difficult. It's really difficult because locking down too far makes it inconvenient.
Right. But you need
You
the
know,
friction, but you need that little point. I've learned, John, I
yeah,
just want you to know, I've learned that, we do need that little bit of friction there. Uh,
right.
yeah. So it's a tough balance.
It's a very tough balance, and it's tough for someone, say, in the information security world, where you see all the bad, every day you're seeing all the bad. You're seeing all the fraud. You're seeing the attempts on, say, $100,000 wire going out, or even $1 million wire going out. And we get to stop them, and we get to see that stuff. But at the same time, you're seeing what happens if just one of them gets through. Like, right? So you want to be. Then you're like, let's lock it down. Let's completely lock it down. But then it becomes so inconvenient. No one wants to use it. And if you don't have anyone using it, you don't have membership, you don't have capital, you can't stay in business, right? So it is a tough thing. One thing, like I said, go back to your risk appetite. What level of risk you're willing to take on?
Yeah.
And for each of us, it's going to be different. You and I, Jamie, we've talked. Your risk appetite may be a little bit different. Well, will be a little bit different. And it will lean more to the member experience side, and my risk appetite will be leaning towards more of let's lock it down a little bit more. But we come to a happy medium, so you work through it. Right. So, I mean, you and I have.
Absolutely. And I was going to say, that's the conversation that's got to happen. Like, you've educated me, and I've come with my point of view, and you have to have good relationships from the security side with the member experience side, and,
yes,
look at everything together and, figure out what that tolerance is, and what that friction point can be.
Absolutely. Some of the best information security people I've met are the ones that come in and work and collaborate and not just dictate. And having to dictate sometimes is very difficult. Sometimes you have to. Sometimes you get to a point where we're not willing to take that risk on at all. But there's other times we're like, yeah, I can see your point. Let's work through that. Is there anything else we can do? So I get it, but it really comes down to, this is our baseline risk appetite, across the board, whether it's financial or cyber, and how do we keep that service that's coming in around that baseline, but at least make it convenient enough for the membership to adopt it, and then we can grow. And if we can grow, that's what we're here for. It's growing and helping our members to get the financial services they need to be successful. So.
Yeah. Well, risk isn't going to be going away anytime soon or ever. So what do you foresee as the emerging risks for credit unions, in the next, 5 to 10 years?
Well, it depends who you're talking to and what sector you're talking about, right? So some might talk about interest rate risk, which we're seeing, mixed signals coming out of Washington right now. You have bankruptcy with some of the job losses that are happening, especially around federal workers. Is anyone going to be able to default on their loans? So that's a concern. That's a risk. I think those are more short term. But they're always going to be there, right? They're just a different level depending on the circumstances that are happening in our society. I think AI is going to be a big one. It's a great tool. It can be used good and it can be used for evil. And we're seeing it. We're seeing good and evil, right? We're seeing synthesized voices used for ransomware attacks. We're seeing fake videos being used for ransomware attacks. So we can see the bad side of AI, but we can also see a lot of the good, being able to crunch data very quickly. I mean, we have a partner that's taking credit union data and being able to use it and help our credit unions determine marketing plans. So AI but it's a risk. It's a huge risk because you have to make sure you vet the vendors out, right? So like free version of ChatGPT, anything you put up there is in their cloud and stays with them, and they use it for the next model. As a financial institution, we have to be very careful, right? So we have to be very watchful of our data. We have to be able to control our data. We don't want it in their cloud. We don't want it in their next learning model. So we have to be very careful with that. So we have to make sure they're like closed AI systems or systems where we can control the data. But it's a great tool that can be used for good and bad, right? So that to me is one of on the technology side, it's a big risk, but it can be very useful. It can be extremely useful because you can create so much data or you can read so much data quickly and create so much a plan out of it, or understand your member a lot easier and quicker out of that. So I would say that's probably one of the risks that I'm seeing, because it's going to go across a lot of that. Mm-hmm. It's going to go across your credit risk. It's going to be going across your liquidity risk, because you can crunch data quickly and see trends very fast. And it creates new graphs for you and, easy to read. But I think that'd be one of the areas I would be I'm actually looking forward to the most, watching this risk. And I know we're delving into it a lot here internally. So, yeah.
All right. So, I mean, I feel like we've covered a lot. So, in today's risk, world, there are many risks. You mentioned a few that credit unions need to consider. There's payment risk, compliance and regulatory risk. Then there's fraud risk, cybersecurity risk, credit risk, interest rate risk, liquidity risk. There's the operational risk, social, environmental, and of course, reputation risk. That's one of the ones that I kind of always worry about.
Yes.
Did I miss anything? And how does a credit union, balance all of this, track it, monitor it, with, then you got your staff and how do you review all of this? It's a lot.
It is. It's a ton. It's a lot of work. There's systems out there that can help with this, right? There's a lot of different systems out there that we can use for enterprise risk management that will look at all these facets. But it's still a lot of work on the credit union and the staff members at the credit union to be able to feed that information in. But it just starts. It starts somewhere. It has to start somewhere. Probably the quickest place to start is your vendor management program. Make sure you are assessing your vendors because that's key. That's a key component. Like the supply chain is usually is a vendor management situation, right? But there's also some of this reputational risk from vendors. If they have a breach, it's going to affect you more than anyone else because it may be a breach, say on, I don't want to throw out a vendor, but say on a payments vendor, right? It's a breach at their level, but your member doesn't know that. They know that they use that payment service through you. So you're the one that's going to get hit reputationally. So vendor management is probably a great place to start and then work your way into some of these other risks. Obviously, business continuity is a key component. You have to stay in business no matter what happens, right? So that's another one to start with. So start with vendor management and the business continuity. Bad guys, they only have one job responsibility. And that's just to break in, get money, move on, find another victim. We have to be able to understand the threats that we face. So where are we going? Risk assessments. You have to do a risk assessment, right? And you're required to annually anyways. 748 says annually you must look at all current and foreseeable threats towards your credit union. And it doesn't just mean just cyber. It could be any threat against your credit union and then assess it, understand the controls you have around those threats, and then try to mitigate any gaps you have there. And then close. And the biggest thing there, we go back to the education side. We have to share our knowledge not only to our staff, but to our membership, and maybe even collaborate with other credit unions to understand what they're seeing and how they are mitigating against that threat. To me, I love collaboration. It's very difficult when you're also competing for the same membership and the same dollars, but it is a very helpful and productive tool.
Yep. Yep. And we're an industry built on collaboration.
We are.
We're cooperative at the end of the day. So why not help each other with some of the things that are impacting all of us and security and, risks. That's a big one. So,
Yes.
Well, John, thank you for joining me. Any final thoughts for our listeners today?
Yeah, just start one place with the end goal, create an end goal, create a map, a plan. Like I said, I would recommend starting with at least vendor management, business continuity management, incident response, and then work your way into some of these other risk assessments, your credit risk, your liquidity risk, maybe climate risk, especially if you're in an area that may see different things like flooding. You may not have been aware of it, and then all of a sudden a local area has it. You want to make sure you're prepared for it. But risk assessments, risk appetite would be the key things there, and then identify those gaps and mitigate. So I know it sounds like a broken record, but it's been great. It's talk about risk.
Yeah, yeah, needs to be a big topic of conversation at that table. So
Yeah.
All right. Well, thank you again for joining me. This episode of Financial Minds Meet the Experts. It's brought to you by Vizo Financial's Risk Management Services. Credit unions are facing more risks, threats, and security than ever before. Those risks are the very reason Vizo Financial has partnered with Defense Storm, Fortra, and KnowBe4. Strengthen your security offense with an ally. Contact your Vizo Financial corporate account manager to discuss fraud prevention, threat surveillance, social engineering, vulnerability scanning, as well as penetration testing today, or visit our website at www.vfccu.org to learn more. As always, thanks for listening and make it a great day.